Well, look, Michael Berry admitting he's wrong. You got to respect it. It's trading, it's the markets. You expect to be wrong more than you're right if you want to make money. Good stuff seeing Michael wrong. Kramer was wrong too. Michael and Kramer both looking for, one was looking for the markets to sell off hard, big, bold call, sell. And Kramer was like, wait for the pullback and then buy. And we've seen, remember we put out that tweet? Watch them both be wrong. Watch them both be wrong. Here we are. We don't know what's going on, right, London? London calling. We focus on the TA. We had the first major repair of the bear market occurring above the log scale trendline breakout. We now have another repair in place. Not only another repair, we've had a retest of that breakout of that trend line. What's really neat about this trend line is it comes all the way back down off of the lows. That's where it came from. And then you could find it throughout. If you place, like you notice how I just placed it here, 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 here. Look at that beautiful retest right there. And that's is just how the market works. But the reason I start off today with the NASDAQ is to lead in to today's session. And if you're familiar with Peter over at the Game of Trades, Peter has been at this at a while, provides really good information. He provided this potential scenario. And by the way, you want to be aware of all potential scenarios. It's just the more information you have, the better prepared you're going to be. If you have one bias, good luck. You might be right for a time, but you will not be around here for the long term. And we're thinking the long-term view. Here we are trying to go ahead and achieve great things, legendary things, epic things. I don't know about you. I don't know what your goals are. For me, I'm thinking generational wealth. It takes a massive amount of work. We're here together, working together all the time. All right, let's go. The reason I start off with this over here is because the title of today's session has to do with a coming liquidity crunch. Something, I don't know that's going to happen, but it's something I worry about. And as you all know, and all those been following, we do our best simply to stay on the right side of the market. And people might be looking at this and people are convinced that, yeah, that's exactly what's happening right now. This is our log scale bear market trend line. We broke above and potentially a trap is being set. I don't know exactly what happens next. Here's that trend line though, by the way. This is that trend line that we're above. Just let me give you a little bit of current situational awareness positioning, what we're looking at right now. Obviously, we are on top of the second repair that is taking place out of the bear market. It is good. It is positive. We know that markets are following liquidity. So we're going to be watching what happens with the liquidity going forward. Everyone knows that since January, since the beginning of the year, I've put out in every single YouTube video that's on the public end, I put out people are concerned about the macro, rightfully so. But what I was trying to say is, look, when I get concerned is when the Treasury, who's undergoing extraordinary measures, their cash balance is being injected into the market. This is before the Federal Reserve went ahead and just expanded their balance sheet to fight the banking crisis. The US Treasury was providing liquidity, counteracting all of the quantitative tightening taking place. And I said, you know what? I'm worried about when they stop. That's when I'm going to get concerned, because when they stop, first of all, they're going to need to rebuild back their cash balance. So they're going to be, in a sense, by raising money, pulling liquidity from the market. And then we're going to have quantitative tightening going on at the same time. And just because right now we're seeing this bullish breakout, that does not mean to me that, well, a new bull market has begun, which it might have, and that we're going to new all-time highs, which we might. But really, I'm just following this current move. I truly believe we're in a data-dependent market, and that data-dependent market has taken on new characteristics now, in so much that, well, not only are we data-dependent, we're bank solvency dependent. Because if we start seeing any further reverberations in the regional banks, money coming into the bigger banks, leaving those smaller banks because people feel that they're too big to fail, or we start seeing money leaving the big banks and going into money market funds or things like or treasuries, we might have further problems. If we have further problems, that means the Fed is going to be printing more money and expanding their balance sheet. And if that happens, well, I expect that we see asset prices continue to rise, as they do have this beautiful thing, about them. Beautiful thing. What kind of nonsense is that? They track the balance sheet. They track the overall liquidity. Now, this line over here at the bottom, this trend line over here, let me highlight it really quick for you. If we break below that line at that particular moment, that's a sell impulse. I'm going to make sure I'm on the right side of that trade. I don't know what's going to happen. I'm following what is happening, right? But right now we look very bullish. We look very good. As long as we're above the purple line, it's very positive. Get below that purple line, we come neutral. Break below this line, and we're always watching our downside. We're positioned on the right side, so we're watching our downside. This may or may not be something that plays out, and it might not play out like this, where you see this little move above and then straight down below. Maybe that's what Peter was thinking. We were below the line at that particular moment, perhaps. But this could take a few months or longer, and it doesn't mean that we don't take out the lower lows, the 12-month low, the bear market low, and or go significantly lower. We simply don't know. We want to make sure that we stay on the right side. Now, the dollar here this morning, you could see, is on the verge of potentially a major breakdown. It's coming into this area of support. By the way, these trend lines over here, you got to love them. They come back all the way to 2008. That's actually when the Fed started this whole quantitative easing and expansion of their balance sheet and gotten us into this mess that we're in. And you can see that this level that's in play right now, price is currently dwelling on this cliff. And if there's no buyers here on this support, you can see that was area support. We briefly drop below it. We're able to go ahead, put in that buy impulse, right? Currently undergoing a sell impulse. If we break down below this, we got this little level over here, and then we have actually a big level. We could be trading underneath $100 on the DXY if we are able to, if we do not hold this level. Watch the dollar. I'm going to come back to the dollar in 1 second, but I want to first just illustrate for you. You can see this is looking at the big four. This is looking at the balance sheet of the Federal Reserve, the balance sheet of the Bank of Japan, the balance sheet of the Bank of China, and the balance sheet of the ECB. And it's very clear to see how we're tracking liquidity, because you can see in the green, right? Let me go ahead and get rid of the Bitcoin. This is where markets bottomed, and you can see that markets are going up. And then let me add back in Bitcoin, and you can see how well it's tracking the liquidity. I do personally believe on the way up that this tracker of global liquidity provides better signal. It doesn't at the top. This is the top of Bitcoin. Bitcoin tops is off like 40%, and you see global liquidity still rising. Take note of this, right? It's not just here. It happens if I go back until 2000 and the last peak of the Bitcoin bull market. You can see Bitcoin peaks over here in December 2017, comes off 50, 60%, and you could see global liquidity still rising. So on the way up off the bottom, it does provide a pretty good signal. At the top, I personally like to follow monetary base total, including the reserves held at the central bank, Federal Bank of New York. You can see over here, as that began pulling back, you could see that Bitcoin topped. If you go back to the previous cycle, you could see right over, let me try to get a better view over here, right? 2017, Bitcoin peaks over here. Look at that monetary base total pulling back, okay? So it's not always one view. It's not always so simple as, oh, look, it's tracking the global liquidity. Well, the 40%, and then go back to last cycle, 50, 60%, that's pretty offsides in my view. We want to be as best as we can be. It's what we strive for. So I'm pointing out this because this is basically the Federal Reserve's balance sheet pulling back. This is neat. This is shared by Flavorous Frav over here. And he looks at the Fed's balance sheet inverted. So you're not looking at Bitcoin there. You're looking at the Fed's balance sheet inverted in Bitcoin instead of US dollars. Does that look familiar? Well, that looks like Bitcoin to me. Right? He says, look, now what do you think is going to happen first? This is the same chart with Bitcoin US dollars overlaid over here. You can see the Bitcoin US dollars for a comparison on percentage scale. Do you think that the gap closes, the gap between this and this, by Bitcoin moving up in US dollar terms, or the Fed balance sheet shrinking in Bitcoin? Now, the Federal Reserve right now is expanding their balance sheet. If you look at what's going on, you could see that because of the banking crisis, quantitative tightening, they said you couldn't taper a Ponzi. Remember, you can't taper a Ponzi. We were like, no. You could taper a Ponzi, but only for so long. Only for so long has come into effect over here. And because of the loans giving out to the banks, we're seeing that the Fed needs to print money to go ahead and issue those loans as they hold on to, quote unquote, temporarily for 1 year, those assets. Maybe it's indefinitely, maybe it's longer. We don't know. Right now, the Fed's balance sheet is rising. Do you think that, and the question posed, is that the Fed is going to go ahead and be able to reduce their balance sheet to catch up to the price of Bitcoin? Or do you think that the price of Bitcoin in US dollar terms is going to come up and catch up to the balance sheet? Well, I go with the latter, and I know Flavorous Frav does, and it's great for pointing it out like that. And that's what likely we're going to be seeing. However, just because the balance sheet is going up right now, it doesn't mean that it's going to continue to go up. And this is why I'm talking about potentially what's going on over here. And you all know that, well, I do have quite a bit of a bullish posture right now. And that's simply because that's the way that price is moving. But I'm not deterministic about what's going to happen going forward. Actually, I think these are really unprecedented times, and it takes a massive amount of work and a massive amount of awareness. And those that like to lean into just like easy things like, oh yeah, you know, whether it's all the way down or all the way up or anything in between, it takes a lot of work. There's no question about that. What I'm trying to do is outline for you some of the things that we need to be watching going forward. Going back to at the beginning of every YouTube video, I have included watch what happens around the summer when you start seeing the US Treasury finish their extraordinary measures. And right now you can see the latest government report is out. US Treasury cash balance is just reached another recent low. There's only $187 billion left. I forget. They started with something like $480,000 or $600,000 or $600 billion when the extraordinary measures started. Here we are now. There's only $187 billion left. Ultimately, this means that we are about to see another flood of Treasury issuances if and when the debt ceiling gets resolved. And that's exactly on signal. That's exactly what we've been saying. Once the debt ceiling is resolved, to go ahead and build back up their cash balances, there's going to be new Treasury issuances. This is going to have the effect, the opposite effect. Right now, this is counteracting all quantitative tightening. Jordan, this is counteracting all of quantitative tightening. We just gave back 60% in overnight, in an instance, in 2 weeks. Yes. Without this happening, what you were seeing was the US Treasury's extraordinary measures was negating that. It was already counteracting. That's why we were turning more of that bullish posture following the liquidity, following what was a turn in the degree of rate hikes. By the way, just because rate hikes have gone down and may even move to a pause doesn't mean that they can't go back up before they get to a cut. We'll have to put everything together, watch everything. Let me go ahead and go back to this over here. Once we get to the debt ceiling is resolved, and I mean, they say when and if, but if the game's over, if they don't resolve the debt ceiling, it's just a political game, I assume. Once they do, the US Treasury is going to be building back up this balance. That's going to have the effect on the market of a double whammy of double quantitative tightening taking place. Just because the balance sheet has gone up over here, don't forget quantitative tightening is still running. At the last meeting, they did not say they're ceasing the program. They actually said we're going to continue with our tightening because we want to make sure that we are in front of inflation. What this means going forward is that we have to watch the situation closely with the banks. We have to watch the reports. We have to watch the balance sheet because we don't know if this continues to go up or if this starts flatlining and then rolling back down, which I assume it's going to. Look over here at the bottom when we come back down. This 5% decrease in the balance sheet, by the way, was the equivalent of a 10% pullback in Bitcoin. It's not only this, we have to watch what happens with the rate hikes going forward, because in my opinion, as Jerome Powell recently mentioned in the last press conference, that actually during the tightening cycle, the rate hikes supersede what's going on as far as the quantitative tightening as having an overall tightening effect. So what I'm getting at over here is, look, maybe this happens. I simply don't know. I'm going to make sure that we do our best to stay on the right side and continue consulting all angles. We had a couple of data points this morning. Final GDP numbers came in a little bit low, but a little bit below expectations. Unemployment claims were in line. We're looking forward, by the way, till next week. Next week is going to be a big week as far as data because we have non-farm payroll on Friday. We have JOLTS on Wednesday, Powell testifying. And whether you like it or not, it really doesn't matter that one man coming from a dark room where people talk about the policy they're setting for the world reserve currency in secret. That's the way it is right now. The US dollar is the reserve currency of the world. Speaking of which, we'll get that in 1 second. Some headlines to go through really quick, and just headlines, right? Fourth quarter GDP comes in lower. By the way, what does the first quarter GDP look like? Right now, Atlanta Fed is pointing to the latest estimate. This was March the 24th of 3.2%. So it seems that the economy, whether looking at it from an unemployment standpoint, looking at it from a GDP standpoint, continues to remain strong. It's why I personally believe the Fed will be hiking another 25 basis points at the upcoming May meeting. However, that is data dependent, and it depends on what happens over here. This is assuming that we get another inline or strong jobs number. And then, of course, the following week after, we have the CPI. And depending on what happens there, if we got a big miss, a really soft number, that would give the Fed the opportunity to go ahead and work towards and move towards a pause. Right now, we're about 50-50, right? 50-50 about whether or not there's a 25 basis point hike or a pause. This is going to change over the next 2 weeks, and that's what we'll be watching. This is of note. Bond yields at ECB, rate hike odds jump. Remember the banking crisis they had right after hours over in Europe, and all of a sudden the tightening expectations came down, and now they're like, whoa. Maybe not, we're going back up. And that's why you have to be data dependent. It's the situation we're in. We don't know what happens. We have no crystal balls over here. But really what I want to get to and come down. Craig, thank you so much, my brother. Thank you. Everyone for being here. Really grateful for each and every one of you. So I'm scrolling down over here. By the way, junk spreads show U.S. economy is close to a recession. And we don't know if we enter a recession, what that looks like, whether it's something that is prolonged, sticky, hard to get out of, or if it is something like the April 2020 recession, which is really quick and clean. We simply don't know. We have to take everything as it comes. But as you scroll all the way down, there's this little headline over here. France buys 65,000 tons of LNG from China, natural gas, in the first ever yuan denominated trade. This is kind of a big deal. This is kind of a big deal for a couple of reasons. First of all, part of the reason that the US dollar is the reserve currency of the world is because that energy is traded in dollars. I was going to say primarily in dollars because that's the truth of it. We are now seeing, obviously, since I don't need to rehash everything that's happened in this past year, including the United States and Europe confiscating the central bank of Russia's dollar and euro reserves. At that particular point in time, people said, you know what? I'm not so sure that I want to hold dollars. And we are starting to see a move from the Middle East, Saudi Arabia, building a oil refinery financed by China, one of their largest now energy partners. We're seeing trade settlement occur in the Chinese yuan for oil. It is the end of the petrodollar, except it's not going to end overnight. It is the beginning of the end, I should say. But now we're seeing a supposedly close ally of the United States, France, buying natural gas from China in Chinese yuan. And that's what's crazy. I mean, it came from the Middle East. But what's crazy about that is that the US, ever since the war of Ukraine, has been the one supplying Europe natural gas and doing it with dollars. You might have to scroll all the way down and through some sensational headlines, but this is the most important headline of the day. This is a great meme. Jordan, it's meme. This is a great meme from Lynn saying they don't know that China settled LNG imports with yuan. And you say, who's yuan? Who cares, right? And that's exactly the situation that we're in today. Let's take a look what's going on with CTM positioning, which is all long. Right now, we are looking at, I'm zooming out a little bit so you could see, like, anyone got any kids? If you have a kid, if you have a 5-year-old, 4-year-old, and you ask them, which way is price going? They would say it's going up. Those charts go up. And across the board right now, we are long across all three. And it's not often that happens. We went through all of 2022. By the way, there was not one long trade in 2022 from Cardano at all. It was all on the short side. This was the first trade in 15 months. So it's kind of a big deal when we're attacking on the upside. And regardless of what happens with these individual trades, it feels good to be attacking on the right side. We could see that Ethereum and Bitcoin are both close to giving up these positions. If we see the momentum roll over at all, whether or not stop losses are hit or these trades exit ahead of time, they will be exiting. If we are able to see the continuation of this, it looks like an attempt to roll over towards that upper resistance. Let me go ahead and look at a chart of Bitcoin. Let me pull up this chart so you could see the resistance overhead very clearly. Look at that last night. Last night, it looked like to me that we were going to be breaking out for another leg up. If you were watching the price action in a matter of a very short time, you saw, let me come to a small time frame with you. You could see over here, and there was this massive move up on Bitcoin and massive move down. I say massive. I think it's like a 3.5%. Let me go ahead and just make sure because I like to know what I'm talking about. So these are 15-minute candles. In 30 minutes, you saw a 2.5% move, right? In 1 hour, a 3.2% move. And then instantly in the next half hour, you saw a 3.5% move to the downside. Those are big moves. Those were quick moves. And you could see that it looked like we were going to be breaking above this level. Right now, it probably caught a lot of leverage traders off sides, right, on that break up, quick breakdown. It looks like that we came back in and have retested that level and are since putting in lower highs. It's a 15-minute time frame. Have fun with me. It looks like we're putting in lower highs and we're coming back down. At the same time, anyone who put any stop losses in off the low of that wick because it worked both ways. People started buying on leverage, wiped out. People started selling, wiped out. But anyone who on the move up put their stop loss at that low, that was just taken out. To me, it looks like we continue to consolidate and consolidate right underneath resistance, which, as you all know, when price is bullish, and price is certainly bullish right now, it is a bullish thing to see price consolidating underneath resistance, because you're seeing a knocking on the door. Each touch, the resistance gets a little weaker, and eventually it could blow. Now, it doesn't mean it's going to go to the upside. It could go either which way. If you were trading this discretionary, I'd be watching this level right over here. Notice I just took my prime trend line and I moved it up. You could see over here, this is where the market's currently paying attention to. Get below that trend line, and obviously the next thing that we're looking at would be a retest of that 25,000 and change resistance, which finally has broken, and that would be, and all still healthy. Break below that, we're rolling over. And I think there's a good chance likely we would even be attacking on the sell side over there. I'm not really sure about that. Let me go ahead and just take a look to get a little bit of some type of awareness. And by the way, this is so beautiful. Price over here underneath the previous cycle ceiling. Price trading underneath 17,000 in January. CTM is like, I don't care. I'm going long here. What? You're going long into resistance? We always find ourselves buying into resistance and selling into support. And people think we're crazy. And we were able to go ahead and stay on the right side of that. I'm trying to see when we'd be rolling over. I have to look at the deviations. So let me come back over here. Yeah, we still got a while. We would have to really roll over before we started seeing any sell side attacking. I'm trying to get an idea of where that would be. It would be underneath this for sure. And that's beautiful, just seeing that lined up from a traditional TA type perspective. So we're watching the dollar under pressure right now, and for good reason. And let me just move over. Daily time frame remains super sound over here, cutting out a lot of the noise, right? Starting the year off, Bitcoin, beautiful, nice catch. And then again here on the upside, daily, you have to have patience. If you want to be good at this, you have to have patience. You can't be looking to take positions all the time, multiple times a day. You have to be able to ride out the noise. Bitcoin, Ethereum, and Cardano all into profit currently on the daily time frame. The exciting thing has been the stocks. There's no question about that. 2023, we've seen Tesla attacking here on the upside. Tesla, this isn't just 2023. No, that can't be right. I knew it wasn't right. Tesla 2023 continues to do its thing. I will be updating today the people who are interested in the inverse. For those who want to sell Tesla and aren't using a margin account, they want to be able to buy when it's time to sell. I will be updating the template to include over here the TSLQ, and watch yesterday's session, understand what we're putting together, and then go ahead and decide how and if you wish to execute. As always, TQQQ currently holding a nice another position into profit. Again, since this is a great return, a lot of people are telling you, oh, most people can't make 5% a year in the markets. Put your money into short-term treasuries. I don't know. This is we're just closing out March, first quarter. It's a pretty good return to start the year, building on another open position, and it compounds together. That's the whole thing, right? This is, by the way, how you're supposed to trade. Small losses, small losses, small losses, bigger wins. Small losses, bigger wins. Small losses, bigger wins. And that's how you do it. But the shining star has been FNGU. FNGU, tremendous. Not only this year, tremendous. 82% return. Holding another position here, 6% into profit. It just keeps compounding and compounding. Go back further, and it remains as such. What's on my mind today is really, I mean, I have over here the Cardano stop loss review on the short side, so that we will get to that. But I think what like the biggest thing on my mind is looking out and putting together along the back of Flav versus Frav an overnight signal period solution for manual traders. You all know that the 8-hour time frame is significantly more profitable than the daily. Now, the daily time frame, and we looked at it yesterday, I'm not going to do it today, the daily time frame more than gets it done. And for the majority of people out there, your favorite influencer included, it would be an ideal situation to be executing off of. However, the 8-hour is significantly more profitable. If we could look at finding a solution for people that are manual trading that's a bit of a hybrid, right? Manual daily trading means once a day there's a potential entry or exit. Stop loss could be hit at any time. And there's roughly between 12 and 18, depends on the year, trades a year. Very easy. You get an alert on your phone. You set your alarm on your phone, 15 minutes a day. You're there to see if you need to do anything. The 8-hour requires doing that 3 times a day and often overnight. If there's a way to go ahead and have a happy medium between the two and be able to increase the results of the daily, not obviously it's not going to perform on the level of the 8-hour, but increase them, then you're looking at something bonkers, and give the people the opportunity to make sure that they're able to sleep uninterrupted. That would be a really good thing. So that's something that I'm going to remain focused on. All right, everyone. Thanks for being here today. Great session. If you are on your way out, we put a chart yesterday, right? Out on the Twitter. Let me go ahead and check it out for you. Bitcoin dominance. All right. So, take a look at the Bitcoin dominance chart, approximately 2-year resistance. Ooh, right now. So Rico is looking at this right here. Look at that. Bing, ding, ding, ding. There you go. Rico, my own interpretation, and by the way, I'm wrong often and I'm learning all the time, is that probably after the Shanghai update, which is just, we're getting soon, a couple of weeks out. At that particular time, likely, and then the timing, I'm not saying like the hour it hits, or even the soon thereafter, we start seeing, let's say, Ethereum outperforming, and likely that takes alts with it. That's my own guess, my best guess of what's about to happen. Will that coincide, Rico, with that 2-year resistance you're looking at? Likely. And if, by the way, that doesn't happen and I'm wrong, then we probably have a breakout of that 2-year resistance, and then we're probably over the next few or longer months headed towards that 60% level, which would be very normal at this point of Bitcoin cycle. So we'll watch what happens, but that's my view of it. Great awareness. Thanks for bringing that up, Rika. Yeah, I wouldn't be surprised if we saw. So the one thing about Mexico though is that what is Mexico, like the 12th biggest economy in the world? They're neighbors with the U.S. They're trade partners with the U.S. And without the U.S., they would be really severely hurting. You know, that's for sure. So they're manufacturers. Chinese are manufacturers. There's really no win-win there for them to be trade partners. And the Mexicans are actually quite the manufacturing in Mexico is at a very, very, very high level. That's going to continue for some time. Likely they will continue to be trade partners with the US. It remains right now a very big market. It just makes sense. The incentives are aligned for both the US and Mexico. So I'd be surprised to see that Mexico trading in the yuan, but interesting that France was the one to do it. Very interesting times. Quinn City is a good one. Make sure you go ahead and watch it. Everyone, thanks for being here. Have a beautiful day. Again, if you're on the replay or live, lots of love. God bless you, everyone. I'll see you all later.